I'm going to tell you 5 main reasons that businesses fail. 45% of all businesses fail within the first 5 years. That's almost half. On top of that, 1 in 3 businesses fail at the course of 10 years. So it's very rare 1 of 3 businesses stands the test of time to make it a decade. If you don't know who I am, I'm Ryan Stewman, and I help business owners make more money. So let's discuss the 5 reasons businesses fail. Number 1 is they don't have a sales process. A lot of people, they just throw it against the wall and hope it sticks. You ask people, what's your script? What's your sales process? Most people don't know. Most businesses don't know, especially small entrepreneurial businesses. They hire somebody and they just expect them to go sell without any process, any training, or anything else. Then there's ultimately disappointment because of the lack of a sales process. Let me give you a simple sales process that you can use yourself and you can pass on to your new employees at any given moment that works. First thing you do is what I call the lean in method. I learned this from my buddy Kevin Nations a long time ago. Go to your social media and ask them if they would be interested in buying what you sell. Just go out there and make a simple post. Let's say that you sell stuffed animals, right? You go to Facebook and you say, if I were to put together a special sale where you could get 20% off of stuffed animals, plus you could get them graded to where they could be collector's item, is that something that you guys would be interested in? And then your audience, some of them are inherently going to say yes. So now you've got inbound leads. That's what we just created. That's step 1 of the process, generate leads. The second thing is, for me, I use our catch selling process. We'll leave the link to the catch selling process video down below to where you can click on that and learn our 5-step sales process right there in an instant that works on any industry, any product, no matter what you're selling, as long as you're dealing with inbound leads. So once I've had the catch conversation, right, and they decide yes or no, if they decide no, then I've got a 21-day follow-up process that we put the prospect and the salesperson through as well. So if you don't have a sales process, it works like this. Post on social media, generate leads, have a catch sales conversation with those leads, and the ones that say that they're not ready yet, have a 21-day follow-up sequence ready for them. Now you've got a simple startup sales process that's predictable that you can start implementing in your business. Because listen, no sales means no income, and no income means no business, and no business is no bueno. Number 2 is bad marketing. A lot of people get sold the stupidest stuff for marketing. I can prove it. When you go to your mailbox right now, it's just full of junk that we don't really care about. Bills don't even arrive there anymore. So we pull it out and we see people buy the dumbest stuff. They're paying to advertise on a little piece of paper that nobody's going to read that we're going to throw away. They're paying to advertise and market, not knowing if we're even their ideal prospect. A lot of business owners don't have a marketing plan, just like they don't have a sales plan. Their idea of a marketing plan is, hey, we got a product. Hope people know about it. See, you need a serious marketing plan. The easiest, cheapest, freest way to get a marketing plan together is on social media. So let me give you 2 things that we use on social media as part of our marketing plan, so it'll help you out. Number 1 is the M3 method, right? That stands for the media marketing method. And what that means is that 90% of your content needs to be to entertain your audience, and 10% of your content needs to be a call to action or a potential way to generate leads or sell your services. So if you make 5 or 6, 7, 8, 9 posts on Facebook, one of those should be an advertisement. It works in magazines. You flip 5 or 6 pages, there's an advertisement. It works on TV. You watch 12, 13 minutes worth of TV, you get 5 minutes worth of advertisements. It works on the radio, right? 90% of the time you're listening to music, 10% of the time you listen to advertisements. That media marketing method works on social media as well. See, a lot of people, they're constantly going on social media begging for business, asking for business. They think that's their marketing plan. They're really turning people off. Social media is there to entertain the audience, and if you've entertained them enough, you earn the ability to advertise to them, just like how it works on TV, radio, and every other source of media. The second part of this is the E3 method. So we got M3, media marketing method, then we've got the E3 method. The E3 method is how you deliver that content, right? So you have an experience, something happens to you. Let's say you get in a car accident today, right? Little fender bender, you're not mad at all, right? You met the person, you got their insurance. It turns out they were really cool and they're in a business that can do referrals from you. Must have rear-ended them, must have been a sign from God, right? That's an experience that you had. So now extract the lesson from that. That's the second E. And then entertain the audience with that lesson. You see, we're put here on this planet and daily given experiences that are attached to lessons. And then us sharing that on social media alone, not the fact that it's entertaining, but us sharing that alone is our part in letting the world know the lessons that we're learning in real time. I think that's important. So you need a marketing plan, E3, M3, Can't go wrong. Next reason, number 3, is they don't know how to file their taxes, or they don't file them at all. I cannot tell you the amount of entrepreneurs that I talk to that are behind on their taxes, or don't know how to file their taxes, or say, well, I don't really focus on that. It's like, you should. There's 3 crucial things when it comes to running a business, right? There's 3 income streams. You get your income from your clients, paying the minimum amount of taxes. That saves your income, right? And then you can get grants and programs like PPP, ERC, things like that from the government. So there's 3 revenue streams that should be fitting into your business. And I know some people say, well, I don't take your money from the government. Why? You're paying it. You're paying it in taxes. You might as well take it back. You're a business owner. They put that stuff in there for you. Take advantage of it. Don't have a hard head. Go get the money. They put it aside. Somebody's going to get it. It's going to be Blackstone. It's going to be Wells Fargo. It's going to be some huge company. You might as well put some of it in your pocket, because they've been putting some of yours in their pocket for a long time. But how do you know how to file taxes? Let me give you a story of what typically happens to entrepreneurs. Year 1, they make $100,000 in their business, and they got to pay, let's say, $20,000 in taxes, and they're like, man, that seems like an awful lot. And they write a big check, maybe the biggest check they've ever written in their life at that point, for $20,000 to the IRS. That money goes away. The next year, they make $200,000. They got to write a $40,000 check, and they're like, man, my CPA must be screwing me. He must not be doing his job right, because I'm having to pay more taxes every year. We forget the fact that we make more income. Here's what I do. It's a very simple meeting cadence that you can have to make sure that your taxes are filed properly, because I've got people that I've met and shared the stage with and done podcasts with, like Fat Joe, for example. He went to prison because his CPA never paid the checks to the IRS. They stole from him. So that could have put anybody that didn't have millions of dollars like him. He was able to survive that, come out of prison, and go back in the entertainment business. A lot of us ain't as cool as Fat Joe, man. That stuff would put us out. So what I do is I meet with my bookkeeping team every single week. And every single week I'm there to explain large deposits, because maybe I made an investment where 2 years ago I put in $500,000 and today it paid me $600,000. That $600,000 is not profit. Only $100,000 of that $600,000 is profit. If I don't have that meeting with my bookkeeper to make sure that that's allotted properly and put in the right place and recorded for tax purposes, then I'm going to end up paying a lot more taxes, because I just assume they know, as if I'm their only client. This is the only transaction. That simple meeting once a week, just going over large deposits and large deductions and what exactly they are, keep you to where when it's time to give the books to a CPA, they can file your taxes cheap, they can make sure that everything's done, and always have the Treasury Department ACH debit your bank account. That way you know for a fact. I never write a tax check over to a CPA or to an accounting firm to file on my behalf. I fill out the ACH instructions in the back of the IRS tax forms, whatever number it's called, and I send it in, and they deduct the tax amount from my bank account directly, so I never have the problem that my friend Fat Joe had, where somebody was taking his money and not paying it. So that's what I would recommend for you. Have the IRS deduct your bank account directly, and have weekly tax meetings with your people, because the last thing you want to do is make a whole bunch of money and then find out none of it's yours. Number 4 is bad service. You know, you can have the greatest product in the world, but if you treat your customers bad, if you don't do what you say you're going to do when you say you're going to do it, if there's massive delays, if your product's defective, if you're getting a bunch of 1 stars, that's a sure way to go out of business. How can you assure that your company doesn't have bad service? You need a service department. No matter how small you are, it might be somebody else to take on to this, but you need a customer service department. Someone who calls after the fact, after the sale's been closed, the service has been performed, the product's been delivered, and make sure they're happy. And by the way, if they're happy, which they should be, that is the perfect time to ask them to go give you a review on either Google or Yelp or whatever it is that you use for reviews and people find your business. A lot of people, they think, oh, I got the money, I can ignore the clients now. Oh, I got the money, they've already paid me, I don't have to do this, that, and the other. Bad service, whether it's a restaurant, whether it's a law firm, or whether it's a roofing company or a real estate company, bad service is a sure way to go out of business. And all it takes to not have bad service is just a little care. Just care about your people just a little bit. You don't have to love them. You don't have to be infatuated with them. Just care about them a little bit, and it'll go a long way. Before I get to the 5th reason why most businesses fail, I just want to remind you that if you're in business and you want to learn some of these things, put some of this in play for you, then fill out the form at freestrategysessions.com. We'll get on the phone with myself or one of my 8-figure producer coaches here that will help you put together a plan. If you want our help with it, go to freestrategysessions.com. You'll get a free strategy session. We'll spend 20-30 minutes on a Zoom call or a phone call with whichever you prefer, and get this thing hammered out to where we can get your business in the right direction of printing money. Number 5 is not delivering. Somebody buys something from you and you just don't give it to them. Somebody expects a service from you and you just don't perform it for them. That is a surefire way to go out of business. And you would think, who would do that? You would be surprised the amount of people that take money in exchange for nothing. Because the entrepreneur mindset, a lot of us, because we go through 4 levels in life, right? We work for somebody else, typically a salesman, then we work for ourselves, self-employed, then we have employees working for us as CEO, and then we own a company that does all the work for us, and that's the owner, right? A lot of us as entrepreneurs and as CEOs, we came from the sales world. To a lot of folks, the hardest part of the business process is the sale. Therefore, when they got the money, they think the job's done. But let me reframe the way that you think around that. When you get the money, the job's just begun, because now you gotta do what you said you're gonna do when you said you're gonna do it. That's the biggest part. But so many people miss that because they think they come from the sales mentality, where in the sales world, you get the money, that is your job. It's over with after that. It's up to the operations department to handle everything. But when you're self-employed, you're both departments. When you're a CEO, you're responsible for both departments. So not delivering will kill you. So let's go back over the 5 things, right? Number 1, not having a sales process. I lined you up with the one that you can use right now in your business. Number 2, bad marketing. I gave you the E3, M3 method where you can put that into play immediately. Number 3, not filing taxes properly or not filing them at all. Now, I told you how you can have meetings with your bookkeeper and accountant, make everything easy, how to pay the taxes yourself. Bad service, how to turn that around and get reviews from it. And then lastly, not delivering is just simply do what you say you're going to do when you say you're going to do it. It's that simple. So if you like this video, you want to watch more like it, you want to learn some things like that, make sure that you watch the entire series here. Watch it all, leave me a ton of comments, thumbs up, comment to other people, start conversations. I check the comments on here like every other hour. So if I see you comment, most likely I'm going to hit you right back, because I'm excited that you're watching my video, because I want to change your life. And lastly, I just request that if you really dig this and you know somebody who needs to watch it, you know somebody who needs to know these things so that they're aware of them, so they don't make these catastrophic business entrepreneurial mistakes, send them this video. Rise above.